morning, afternoon, or evening, everyone. Welcome back to another episode of Coffee and Cryptos. I'm Ryan, and today I'm drinking a chai tea latte. If you're curious on how to make your own chai tea latte, be sure to check out Dom's video titled Cozy Fall Drink Recipes. So for today's video, we are going to cover the latest headlines, especially the ones regarding the collapse of Sam Bankman-Fried's crypto exchange, FTX. There's a lot to unpack with this one. Let's get started. So what happened with FTX? By now, many of you know that in short, they suffered a liquidity crunch, much akin to a good old-fashioned bank run. Let's break down the timeline. November 2nd. Based on a leaked balance sheet for Alameda Research, FTX CEO Sam Bankman-Fried's trading firm, CoinDesk reported that much of its reserves were based on FTT, which is FTX's own centrally controlled and printed out of thin air token, Swan Bitcoin CEO Corey Klippstein told CoinDesk. Now, FTX uses FTT as a reward currency for trading discounts, and Alameda held far more of the tokens than traded on the market, suggesting its stake would be hard to liquidate at current prices. On November 6th, Binance CEO Changpeng CZ Zhao said that his company, which is the largest crypto exchange, planned to sell its FTT holdings, which dated back to an early investment by Binance and FTX. CZ compared FTT to the imploded Luna token, which Binance also previously backed. FTT's price started to wobble after this announcement. November 8th. FTX stopped paying back customers, its first visible sign of weakness. The love seemingly arrived quickly, with Binance signing a non-binding letter of intent to buy its smaller rival. CZ said in a tweet that FTX asked for our help as it faced a significant liquidity crunch. FTT plummeted by another 75% on Tuesday after CZ revealed his takeover plan. Going to the next day on the 9th, Binance quickly reversed course and backed away from the deal after a corporate due diligence review revealed issues in FTX's financial situation that Binance said were, quote, beyond our control or ability to help. On that same day, along with its liquidity crisis, the Securities and Exchange Commission and the Commodity Futures Trading Commission started investigating the company's relationships with sister entities Alameda Research and FTX US, as well as allegations that the company mishandled customer funds. Crypto.com also stopped withdrawals of USDC and USDT on the Solana blockchain Wednesday out of a, quote, abundance of caution, CEO Chris Mazarlik wrote on Twitter, citing FTX's role in trading Solana-based stablecoins and operating a Solana bridge. Solend, one of the larger Solana lending protocols, reported that it was having problems liquidating part of a large loan Wednesday morning. It also disabled all borrowing, according to its website. November 10th. Bankman Fried announced that Alameda Research would wind down trading on Thursday as a Hail Mary effort to save FTX. He apologized in a Twitter thread announcing the move. Quote, right now we're spending the week doing everything we can to raise liquidity. I can't make any promises about that, he said. The company was also weighing the option of bankruptcy. One day later, November 11th, FTX files for Chapter 11 bankruptcy. The company also announced that Bankman Fried resigned as CEO. FTX, Alameda Research, and roughly 130 affiliated companies started bankruptcy proceedings to review and monetize assets for the benefit of all global stakeholders, the company announced on Twitter. The filing includes FTX US, despite Bankman Fried previously stating on Twitter that the operation was isolated from the financial chaos of FTX as a whole. November 12th. According to a report by Reuters, at least $1 billion in funds from FTX customer accounts have gone missing. After Bankman Fried moved $10 billion of customer funds from FTX to Alameda Research, a large chunk of that sum, between $1 and $2 billion, vanished. Separately, FTX said it's investigating unauthorized transactions after blockchain analytics firm Elliptic said $473 million in assets were moved out of FTX wallets in suspicious circumstances early this morning. Now, SBF and members of his team have largely been on the run, hiding out in other countries. So what does this all mean for the crypto market? In the long run, nothing. The crypto space is something that will always continue to develop and grow and weather growing pains. As innovative new solutions are thought up and implemented, we will only see the crypto market get stronger with time. And if I'm being honest, crypto has survived events like this before. However, this isn't to say that the event had no consequences for the short term. Prices of cryptocurrencies across the board plummeted sharply in the days following the event, and one could argue that this misstep set us back years from getting other institutional money into the crypto space, retail included. Now, with every criticism or blow, Bitcoin remains strong. While its price may have dropped, many are using the FTX incident to draw a clear delineation between Bitcoin and crypto, making arguments for why Bitcoin is best, and then there's everything else that just seeks to improve it. But in reality, these people claim that nothing can beat Bitcoin. Speaking of something that falls into the category of everything else, we need to talk about Solana. Now, while all cryptos have been struggling lately, the fact that Solana had a lot of exposure to FTX is not faring well. Despite the good things about it, I had to come to the hard decision to sell out of it. Now, I could very well come to regret this decision in a few years, and for everyone's sake who still is invested in Solana, I hope I am wrong. But that's the game, risk and reward, can't win them all. Now, regardless of what happens, this event has shown people exactly why it is not safe to keep your cryptocurrency on a centralized exchange. Centralized exchanges like Coinbase are meant to be places to buy small amounts and then send it over to a hot or cold wallet. I'll go over what those are in a future video because cold storage is arguably the safest way you can protect your crypto. Now, cold wallet company Ledger reported record sales this month as people start to take their coins off exchanges. These are all steps in the right direction. Well, that's all for this one, guys. I hope you learned something new today. As always, thanks for watching, and don't forget to like and subscribe if you enjoyed the content. Follow us on Instagram at Coffee and Cryptos, and I'll catch you on the next one. See you around.